Hey guys, welcome back to my YouTube channel. In this series, I want to share some really interesting, trading tips with you guys. So if you're new to my channel, my name is Gislen, and I share my trading ideas on this channel. So, what you're looking at here is a piece of price action that I want to demonstrate how I mark out my levels and how I really approach the market. So when I come out to the market, I look for the external swing points and I look for the internal swing points. So when people hear of support and resistance, just look for areas in the market where price has rejected, price of like highs in the market, highs and lows in the market. Like to them, that's support, that's resistance. Anywhere there's a high, anywhere there's a low, that's support, resistance. But that's totally wrong. That's because this is not resistance, this is not resistance, this is not resistance, but this up here is resistance. Why is this up here resistance? Because there's no liquidity line above this area. If you look at this high very well here, there's imbalance, there's fair value gap, everything. There's just a lot of liquidity above this high. Okay, because this high took out structure does not mean that high is your resistance point. No, that is not your resistance point. Okay, what you want to do in a market structure like this is to look for a break and retest of horizontal levels. That's how you trade these internal swings, break and retest. But now when you reach these external swings, like when you reach these external highs and lows, these huge impulsive highs, that is where you start marking out your levels. You do not mark resistance and support inside this leg. You don't. There's no resistance, there's no support inside a price leg. Inside this swing low, like from this high to this low, there is no support or resistance inside of it. All we have is tiny structure highs and lows that have been formed and broken. So what you want to do is you want to align these levels and trade from. But if you want to trade support and resistance, you should be looking for these external highs, the main highs that do not have liquidity line above them, and highs that have produced impulse, that have resulted impulse in the market, that have taken out structure. You should look for these highs. You should look for these lows. These are swing lows, big swing lows. But this here just have lower high, lower low, lower high, lower. This is a downtrend. This is a pullback. Probably this is just like a pullback here. And you're looking for resistance and support inside this. No, that will never happen. Because when the market gets to your support, it's just going to slash through it because it was not support to begin with. It was not your resistance to begin with. This up here was your resistance. Okay? I repeat, you cannot trade from here because there is liquidity up here. There is gap. There is a gap up here. There's another high higher than this one. So that is not, this is not your resistance. Instead, what you can do is wait for this low to be taken out. Then you can sell from this low. You are selling from here. Then when this low produces this high, this is not your resistance. No, because there is another high higher than this one. There's liquidity. There's a lot of liquidity line above this level. So what the market will do is the market will just come right there and spike up to take out all of this liquidity even before reversing. So you don't want to be in a sell here. Instead, wait for this to continue this trend down. You should join this trend and write it down. And the only way to join it is to enter on the pullback phases. To know where the market is, the market has pulled back well enough for you to enter. You should measure this price leg from this internal swing high to this internal swing low. Get the 50%. When you've measured the 50%, then you check to your left, okay? Just look across, look this way. If there is any swing low or high that you can mark out as a key level, a price area that has been rejected, that price has rejected. Okay, if there's any zone there that price has rejected, then you draw it out. Remember, this area, if you're looking to sell, okay, you should be selling at premium. Meaning, if you draw your fib, let me just there's just a lot to cover, guys, so I'm just getting confused. There's this swing high, swing low, okay? This is the midpoint of this leg, this price leg. This is the middle. And if you want to sell, you want to make sure that your sells should be above this middle part. Meaning, you're trying to sell as high as possible so you can make profit. It's just like having a commodity. You bought this commodity really expensive. Selling it at a lower price, which is below this 50%, you will not make profits. That's just the understanding here. So if you are to buy this market, on the other hand, You're looking to buy this market below this 50% level. So you want to buy as cheap as that product can get, so you can sell it for a higher price and make money. So right here, we have this leg. We have the 50%. Above, we are selling. Below, we are buying. And now we are looking to sell this market because this market is in a current downtrend. So what we want to do is, first of all, we get the 50%. Second of all, is there a key level? If this level was not, like, let's say this is what the market was looking like, we won't take any trade here because there's no key level, there's no key level. We cannot trade here. But now we have a key level that exists inside that midpoint. At the midpoint of this price leg, there is a key level that exists. So we're going to set our sell limit right there. If the market pulls back in, we get tapped in and we trade. That is how I trade this thing. Then my support and resistance now are the big boys. They're the main guys. They're the main structure, like the external structure, the big swings. These huge swings. This is where I have my resistance. This is where I have my support. So if this price leg pulls back all the way down here, I'm looking to buy this market. So I'm going to buy as many times as possible until this key level eventually breaks. Like here, I sold here. Then I'm still looking to sell again. Okay, but I'll keep an eye on this price leg. If this piece of price action here, if this move is not strong enough, if this move didn't take out any structure, it just pulled back just a little, I'll not sell again. But if I saw impulse that was delivered, then I'm looking to take again until that price that key level breaks, like it just did now. Then what I'll do now is I'll just look for a retest of this area. Okay, I'll just look for a retest of this key level for me to take a buy. Why am I taking a retest? Because I have two highs here that have been rejected and the key level has been broken. I mean, when the key level breaks, I'm just looking for what? A retest for me to buy. I'm still going to give you another tip. Okay. I don't have courses. I don't sell courses. So that's why I give everything for free. But if you want to take the same trades like I do, if you want to like join my VIP Telegram group, then there's a link down in the description below. Click that link. You can go to my free Telegram. There's a Telegram channel that is free. There I share my trading ideas and I also post my setup, some of my setups, not all of them. But if you want to like take 100% of my trades, if you want to ask me personal questions, if you want to go on Zoom calls with me, then you should go for the VIP plan. So when you enter the free Telegram channel, there's a pinned message. You can check it out there. It's $50 for a month. So you can subscribe to it. And let's get started. So right here, if this price leg has broken above this resistance, I am not looking to buy immediately when it pulls back to retest. And here's why. I'm not looking to just buy because it's retesting here. It's going to retest and work, okay? But for me, I just feel like I'm safer buying very, very low. And if you look at this price leg, if you measure this thing on your Fibonacci, you see that this rejection here is inside the premium area, and I cannot be buying in premium. I cannot be buying that expensive. I will not make any profit selling that stuff back. You feel me? So I want to buy at least if I have a retracement inside this 50% level. Is there a key level there? Yes, there is a key level. This is the key level. Okay, we have one, we have two rejections. So we have one, we have two, then three is the third confluence is this key level is located in the midpoint of this swing. So there are three confluences. Buying here puts you on an edge. You feel me? That's smart. If you're enjoying this content so far, please do smash the subscribe button. I'm new to YouTube and I need your support to keep going. I provide my content 100% free. The only thing that I sell in my Telegram, okay, are the signals and maybe the personal coaching and stuff, because some people just have some extra personal questions and stuff, and I share my trades there 100%. That's the only thing that I sell out because I don't feel like I have enough time to check my setups, post them, and all of these things is really, really choked up. So I should be collecting a penny for my work. You feel me? So join the community if you want to. I don't really need too many members in my VIP group because it's going to be too much work and I cannot handle that. So I'm looking for 10 people. For now, I'm looking for 10 people. So secure your spot and let's get it. Now, let's go to real charts and let me show you. what I am trying to say here. So now here we are on Euro JPY, the 5-minute chart. These are scalping setups. Okay, if you were to scalp this market, these are the kind of setups you should be looking for. So if you can look at this market here, bam, what can you see? I can see internal swing highs and lows. This is an internal swing high. This is an internal swing low. But now this is an overall downtrend, right? This is an overall swing low. Like if you look at this here, this is the overall, this is the main low, the swing low, because this low has like taken out everything. This is the main low. But what we have here is just small, tiny key levels being formed in the market. Tiny moves. Small high, small low, small high, small low. Inside a big trend. It is an internal structure. So we have a high that produced impulse that took off structure. This has the qualities of resistance, but it is not resistance because we have liquidity above it. We have imbalance above it. We have everything above this key level, and this is not a good area to sell the market. It might hold, but to be on the safer side, I'm just giving you to be on the safer side. Don't trade that. What you should trade, however, is this guy up here. You see this guy? See this guy? This swing high. This is the high you want to trade because there's nothing there. There's nothing. There's nothing above it. There's nothing beside it. It's just like alone. It's isolated. It's like an island. It's clean. That is where you want to sell. So what you do here is draw out your key level. You draw your key level. Let me zoom out so I can draw this thing across. You see now, like if you look at this swing higher, you see there's nothing here. There's no liquidity. There's no other high to compete or to disturb or some kind of imbalance or inefficiency. There's really nothing there. So you want to make sure that this is your resistance because that's your external swing point. This is your external swing high. This is your external swing low. So all of this is just internal structure and you don't want to have any support and resistance. There's nothing in here like support and resistance. Okay. Anything in here is break and retest. So this is how I approach the market. You see the market go here, tapped in and rejected nicely. The 1:2 risk to reward here would have been superb. So when this level got broken, what happened? Let me stretch this out, guys. When this key level here got broken, what happened? The market pulled back to its retest. So what are the rules when trading this thing? First of all, we calculate the midpoint of this leg. We draw it from the lowest point of the market, the wicks, right up the wick. We look for the midpoint. This is the midpoint. Is there a key level? Yes. Yes, there is a key level. So we buy. Are you feeling me? I'm going to teach you how to trade this internal structure. So don't just be patient, okay? I'm showing you how to trade this external swing points. These external swing points are support and resistance. This internal here is break and retest. You feel me? It's just like that. That's how this is how I approach the markets. Everybody's unique. I'm so damn unique in my trading. So right here, we have this thing pulled back right inside the midpoint of my key level. So I'm just going to have my buy limit sitting right here, waiting for this beautiful trade to come by. And my stop loss will just be below this wick. You can see this tiny wick here. I like to keep it just there because, for extra safe, to be extra safe, or I might still put my entry down inside this midpoint. It depends on my Fibonacci, what my Fibonacci says, but I think inside that midpoint will be perfect. Then I'm looking for 1:2, not 3, not 4, 1:2. Bam, this is what I take on average. Sometimes I just go extra greedy and want to take more and it doesn't really end well. So 1:2 is perfect. Very, very perfect. This is 5 minutes. You'll be out in a few minutes, okay? Bam. We have a winning trade right there. Then the other trade that we saw here, the selling trade, this one, it tapped in here nicely. Stop loss just above that zone. When putting your stop loss on key levels like this, you're looking this way, okay? You're looking at past price action. You're looking at the previous high. So to check, where did this high close? Where did it open? Where did it close? There's nothing above this key level. So I'll just keep my stop loss really tight like that. So if I get stopped out, I get stopped out because even if you put it right up to the sky, you're still going to get stopped out if it's a bad trade. So get stopped out on time so you can easily, remodify your setup. So now we have a 1:2. Well played. Well played. You feel me? These are well played trading setups. So train your eyes to see the market like this. Now let's move into internal structure. Let's look at internal structure. So let's say this market has been trending down and down, and this is all we are seeing. This is all we have. We've drawn our resistance level, but we just want to trade because we cannot wait for the market to go back there. How do we trade it? We use our, break and retest. That's all. First of all, we look for what? The internal swing highs, swing lows, and all of that good stuff. So here we have a swing high, bam, down to the swing low, bam. Did the trade pull back to 50%? No. Is there a key level there? No. So we ignore it. As easy as that. We come back here, swing high, swing low. Okay? 50%, yes. Is there a key level? Yes, there is. This is the key level. We have this level, we have this level. All of these rejections is pricing. So we can draw it from this high here. You can look at this tiny high was formed, broken, retested. You want to draw it like this, and make sure you have the most touches. Okay, make sure these levels are being tapped as many times as possible. So you can just draw it out like that, and there we have a trade. Midpoint of this move, and it's even above the midpoint, which is good, meaning you want to sell as high as possible. So even if it's up here, it's really, really good. It must not be exactly the middle. It can be above the middle, but not below the middle. If you're buying, then it should be below the middle. Okay, so there we have a trade. Then we come back here again. We look for another trade. We take this external swing high, and we look for what? Internal swing high. We look for this internal swing low. Do we have a tap in the midpoint? Yes. Is there a key level? Yes, there are key levels here. So what? We highlight them. We draw them out. There. Midpoint. Very, very important. Very, very important. Okay, this is how you trade the internal structure. If you are impatient, just like me, because I'm impatient as well. But I've worked on my patience, so we're not really the same. I've trained my mind to wait because I know what I'm doing. At one level, I know what I'm doing. Even when I lose, I don't really worry myself because I know how my system works. So if I give you a signal and you take it and it doesn't play out, it does not mean I'm a bad trader. Okay, like everybody takes losses. The one thing is you cannot lose out because you cannot lose more than 3 trades in a row. That's crazy because if you lose 2 times in a row, one win is going to cancel them off. That's one thing about the strategy that I use. So there we go. Another trade. We have a break of these lows, but it didn't break well enough. Like if you look at this low, the gap from this low to this low is not really far. You don't want to be trading anything there. Okay, now it moves up. Bam, breaks straight directly into this resistance here. Bam. So if we're looking to, let's say we missed this trade. Let's just assume we missed to sell here. What can we do now? Seeing this price leg pulling back down, and this is all we can see. This price leg. We're looking to buy this level. Then now we have a key level here. We have a key level here, and we want to buy this market. What do we do? Same thing that we're doing here. We measure this leg from this swing low to the swing high. We look for the midpoint. This one. Is there a key level? I see a key level here, but it's slightly above the midpoint, which I don't like. Oh, no, guys, let me check. I'm very sorry. This is the swing low here this week. I'm sorry. So we want to buy this market, but I would like to buy this market at this point, at least 50% or below. This is where I'd like to buy this market. And the market never got there, so I didn't get a buy. Okay? So this is how you do it. 50%, look for a key level, trade it. If you don't understand, rewatch. I'm very sure you get it. You're not that dumb. So keep going. Nice. Let me look at this one also. Look at this price leg here. Let me look at this price leg. Okay. We have this swing low here. We've taken this trade. This share has broken structure to the upside. Now we want to buy. We're interested in buying this market, right? Now, this is a key level, but we cannot buy here. If you know why, please let me just see. Let me just type I know why. Please just type I know why in the comment section. I love live streams because I talk and they respond to me, but I cannot do it because I'm all alone. So you guys should join the community. So let's start doing some real Zoom calls. Like let's start doing this thing for real. Feel me? So now we have this level here broken. Then we have a key level here that we cannot buy because why? The market is too expensive. Why is it too expensive? Because the market did not pull back inside our 50%. It did not retrace 50% of this price leg. It did not retrace back to the 50% level. And even if it did, there's no key level there. The key levels that are here are above the 50%, and we cannot buy there. So this is how we avoid bad trades. We avoided that trade because the trade didn't actually work out. Then We see this. Now, this is fake resistance. Let me show you fake resistance. What I was trying to tell you about liquidity and imbalance and all of that stuff. Factors that make trend support and resistance invalid. So here you can see that we had a very, very strong push to the downside, right? Yes, we did. So would you come on here and highlight all of this area as support, as resistance? No, you cannot, because we have multiple highs here. We have multiple highs here. We have this high that broke structure. We have this highs that produce this one. We have this high. We have all of this. Do you know what all of this is? This is money. It is called money. It is called liquidity. You feel me? This is all liquidity. And what the banks or what the big guys will do is they'll just run your stop losses and take your money. So what you want to do is you want to look for highs that don't have any competitors. They are all on their own. They're independent. So these multiple highs here is crap. And first of all, resistance does not even look like this. I've just trained my eyes. When I see stuff like this, it just irritates me. This is not resistance, bro. I'd rather buy down here because this low does not really have any competition. You feel me? So let's look at this. Let's look at this, guys. You see this low? See this low? This one. It is not resistance. It's not like it will not work. It can still work, but most of the times it won't because it is not resistance. Look at this low. Look at this. All of these equal lows. Anyway, you see equal lows in a market is called liquidity. People's stop losses are just lying below these levels, and people are looking to what? The banks are looking to take them out of those trades. You don't want to be part of. Buy here or you buy the other previous low that we saw there. You can take a trade there. Yeah, at least if you take a loss, yeah, you trade it like a professional. Trade like somebody who knows what he's doing. Feel me? So now we came here, we see this. We have a break of structure here to the upside. Then we have a 50% retracement. Of course, this low retraced 50%, and it's a key level, and you see the market playing out very well. So let's just keep watching price. Let's fast forward this. This video is already long enough. And let me show you what I was looking at today. Oh, I'm so sorry about this, guys. This thing is really slow. I don't know why. I don't know. Maybe it's my network connection or something. Oh, why is it acting up like this? Oh, damn. I think I'm going to cut this video here, guys. So you can see what I'm trying to say, guys. So you see this, you see all of this. This is all factors that align. They all fall in hand, okay? So this is another confluence. This is another, high that I looked at. You see this high here has no competition, okay? This was the original high. This is where the key level originated. Then these guys tapped in, and they were all they just started coming back to it. Retest, reject, retest, reject. All of them. They started rejecting, and everything. So just imagine you had a sell limit here, make money. Sell limit here, make money. You keep selling till this level breaks and you lose, okay? It just keeps going. My screen is frozen. I don't know why. There's a glitch. Something's going on, but I'll just stop the video here. So for, those of you still watching the video, I really appreciate you guys a lot. Thank you for your support. Like, comment. Most importantly, do subscribe and turn on the notification bell because this goes a long way to support this channel. Thank you all so much.